Yo, what's up you guys? Welcome back to another video. Today we're going to talk about a weekly market update where we're going to take a look at the market from both a technical and a fundamental perspective. But before we get there, guys, we have to talk about the channel that had just hit 10,000 subscribers. I cannot believe that we came this far just in February this year with things sitting at 5,000. We just added another 5,000. Welcome, and I hope you guys are continuing to enjoy the content as more things are coming to the channel. I am going to drop a very important video for you guys. It's either coming out tomorrow or Wednesday. That will basically be exposing a lot of the secrets that your mentor has been using or asking you to pay for, and I'll show you how to get all of that content absolutely free, whether it's an EA, whether it's a course, everything for mahala. Now, without any further ado, guys, let's jump straight into it. And don't forget, as always, once this video hits 100 likes, I will drop another trade that I'm going to take this week for you guys with stop loss and entry. All you need to do is take it as well. So without any further ado, let's jump straight into it. The first thing that we are going to speak about is obviously the jobs report that came through negative. Unemployment went up. The PMI came through negative. The yield took a dive, and because of that, stocks obviously increased because we used the yield indicator to determine whether the Feds are not going to hike the interest rate or not. And the way it seems now, we could potentially get another stall. And because of that, we obviously saw that the payroll increased by 150,000 in October, but it was less than expected. It says here non-farm payrolls increased by 150K for the month against consensus forecast for a raise of 170,000. That was a sharp decline from the gain of 297K that they got in the previous month. So September looked better than October. The unemployment rate was also up, the highest level that it's been since January 2022, while when the Feds just started with putting the interest rate in place. That's what they started last year, I think, and ever since then the unemployment is supposed to come down. It says here amid a drop in house employment. Now, where did these jobs fill in? Basically, firstly, we can see here 58K of that 150K jobs. 58K of that was made up in the healthcare. We also had 51K of that was made up in the government sector, and 23,000 in the construction sector, and then social assistance was 19K. Moving on, the stock market, as you can see, popped 200 points on Friday to cap the best week for stocks so far this year. And we obviously know stocks were basically battling getting back to pre-pandemic levels, but because of this negative reading, we obviously do expect now for a weaker dollar until we get something positive to rely on. Now, firstly, what we can see over here is we can see the market had finally broken out of this consolidation phase that the market came into in the 12th of October. Then it's been stuck into that level up until November the 23rd, which is basically it's quite a while. But we obviously know, according to the rules of price action, we had a market that broke below support, and once support gets broken, it becomes resistance. And because the market had printed an equal low, I do expect a pullback before a further continuation to the downside. Next up, we've got Euro USD printed an overextended W formation. After an overextended W formation, you normally expect a pullback to the left leg before the continuation to the upside. And this left leg also serves as a level of resistance, and once resistance gets broken, it becomes support. And that also looks like a 0.382 Fibonacci retracement level if you take your Fibonacci from the low to the high, and that is exactly what it is. CNBC, if you're watching, just now, I'll come work there for free, maybe like the 1 month. Yeah, we've got another overextended W formation. Yeah, I do expect a pullback to this level. I would probably consider this level, but we need a deeper pullback before continuation to the upside. So this is definitely expected. Next up, we've got the German 30. If you remember when I spoke about this market, it was sitting at this level here, anticipating all of that move to the upside for the market to also complete a W formation. We do not expect a pullback to this neckline before seeing any continuation to the upside. Next up, we've got NASDAQ. NASDAQ also went exactly as anticipated. This market had now broken above a very strong level of resistance that was once here support. Now the market printed new structure that we do expect the market to pull back to before a continuation to the upside. This is also a level of resistance that got broken that is now acting as a level of support. Next up, we've got the Dow Jones printed a W formation over here. Very important that we keep in mind about the structure that the market created over here. The market is also currently testing previous resistance that is now testing support. So we do expect a pullback from here. We could potentially see a deeper retracement before a continuation to the upside. Next up, we have gold. Gold printed an impulse correction. After an impulse and a correction, you obviously expect a continuation. And if you take your Fibonacci from the high low to the high, we can see that we did get a 61.8 pullback, which is known as the level where the market would definitely pull back. And we're going to use the minus 27.272 as our take profit level in the market. From here, I do anticipate the market to continue higher, because normally when you get a candle with a long body to wick ratio, you normally expect the next candle to fill in the wick. Because if you go on to the 4-hour time frame, you'll probably see this was an impulse correction. There we go, impulse correction. Definitely that continuation to the upside. We could also see this market just pull back slightly before continuing higher. Next up, we've got USD ZAR. If you remember, I spoke about USD ZAR here at this level, anticipating that move up because we had this head and shoulders pattern that the market had created. And I said that we can definitely expect this market to continue lower and come to this level. But there was a deeper continuation to the downside. Market broke multiple important structural levels, printed an impulse. So after an impulse, you expect a correction. If you take your Fibonacci from the high to the low over here, we got a 0.382 that's lining up perfectly with this level over here. So in the short term, I do anticipate a slight pullback to the upside before a continuation to the downside. Guys, don't forget, 100 likes on the video, you will definitely get another trade to take. We've taken the first trade that I sent you guys was a buy on gold at this level, and I know some of you made some very good bank on there as well. Thank you for your time, and before we continue, let's go through some of the questions. Nazim, thanks a lot. Luciano, exactly what I need. Mr. R, always come through for the people. You're welcome. Macro FX is saying, for the NFP, we only look at the job openings, and if the job is positive, that means positive for the NFP, and we buy. So I'll give you some guidance, right? And this is not financial advice for Helen over here, FSCA to Alu. So I would never advise anybody to trade any news events, right? Whether it is before it comes out, whether it's after it come out. The best time to trade the news is after it came out, because it's better to react to what you know than what you think you know. It is not going to change your life. You're not going to die if you wait just 5 minutes for the jobs report to come out. At least you know which direction the market's going to go once you get that data, which is why I've also stopped doing that forecasting videos for the NFP, because anybody can say it's going to be positive and they believe they somehow knew they were right. However, the market only has two probabilities. It's either going to be positive, it's going to be negative. So if you say it's negative, I say it's positive, it doesn't make me look good if I can't produce sufficient information to why I think it was going to be positive. And that is a WhatsApp message from Jerome Powell to say that, my friend, you can buy, but I would just tell you to not do it. Like Los D, if the NFP is positive, DXY increase in value. If it's negative, that decreases in value. That's it. But wait for the data to be released. John Ashore is saying, been watching for a minute now and was just wondering, during which hours should you recommend to trade? Whenever I see any videos on this subject, they always refer me to trade during London and New York sessions. The problem is they live outside South Africa, and I have a feeling that some of what they're saying gets lost in translation. So I'll tell you what, right? As a trader, you need to have a set of rules that you follow. And when I say set of rules, you look for certain things in the market that needs to take place first before you take an entry. And when that rules are satisfied, that's when you enter the market. That's why a lot of people ask me if I can go live, and I said I would probably go live one day, but I'm not the type of person that sits in front of a 9 o'clock in the morning. I'm busy working out, and that's when the London starts. I'm not the kind of person that sits in front of a PC or a laptop and throughout NY. I'm not at my desk at 3:30 like a lot of people is at. No, like I always check the market every 4 hours to see if there's a valid opportunity, or on the 1 hour to see if there's a valid opportunity. So there's no specific time that you can trade. If you have a set of rules that you can trade, then whenever those rules are satisfied, you place an entry in the market. Whether it's buying gold at 2:30 in the morning, selling the NASDAQ at 9 o'clock in the morning, if your rules are satisfied, your rules are satisfied. So you cannot really wait. You cannot wait. You see your rules are satisfied, so you're like, I'm going to wait till the NY opens. No, you need rules. Follow a guideline that you follow. And if your rules are satisfied, you take the trade. Guys, that is it from my side. Please let me know what your thoughts are in the comments below. And your 10K subs, guys. Thank you once again. Thank you for your time. And like I said, I'm going to drop a good video for you guys either tomorrow or Monday, because it is getting edited. Yeah, that's the first video I think that's getting edited, but I'm doing that especially for you guys. Thank you for your time, and as always, cheers. Yes.